Hello, Jim here. Today I have two different companies. They're big, healthy, value companies, dividend aristocrats, companies that have been around many, many years. And a lot of times people kind of overlook these. They don't necessarily have the best premium, they may not have the momentum, but typically they're very good companies and they should be part of anyone's portfolio. Now, I really like running the wheel on these, but I do it slightly different. A lot of times I will take less risk with the covered calls because I really want to own these companies long term. So the two I'm going to talk about today, one of them I've owned many years, the other one I've done several trades on. I currently don't own it. Both I plan to run the wheel on even more. So I'm going to share with you why I chose these, a little bit more detail about them, and the type of trades I want to run on them. So stay tuned. I think you're really going to enjoy what I have for you. Okay, so the first company I want to talk about is Procter and Gamble. They currently pay a good dividend, 2.44. The dividend rate is right at like $4. They're not the cheapest stock. They are right now 165, but they have stayed in a pretty small band. Like if we go out 5 years, you can see, you know, they've been in around the 150s, 160s for quite a long time, going all the way back to 2020. So it doesn't move a whole lot. So the 52-week range is 141 and 169. So it is a little closer to its 52-week high. But I don't necessarily see that as a bad thing. Their PE is potentially a little bit high, but not anything to really worry about. Now, if I look at earnings, I like to look at the year over year earnings, and they have pretty good year over year earnings. So it looks like they're going to have a really good first quarter, second quarter, and even the third quarter looks like it's going to jump a bit. So year over year earnings look good, and they typically have beaten earnings. Now they did miss a little bit with revenue. It looks like they missed by about 240 million. Their next time that they have earnings is July 30th, so a couple weeks from now. And then last time they did beat by 11 cents. Dividends, you can see they have paid 2.44%. Their payout ratio is fairly low. I mean, especially for a giant company like Procter and Gamble. Their 5-year growth rate is good. And they've been growing their dividends for 67 years, a lot like Coca-Cola. I think Coca-Cola may be also around 67 years. So we can look at profitability. They have very good profitability. So we can look return on capital, 16. I like to see return on capital in the teens, return on common equity over 30, which is another number I like to look at, especially if a company has over 30, it's doing quite well. Now, if we look over here, I like to dig a little deeper into the dividends. So let's do that. Let's dig into the dividends. And you can see they've been increasing them pretty nicely. And again, for many, many years. So if you bought them back in 2014, you would have been earning 253, but those same shares, you'd be pretty close to, it looks like $4 a share, 374 and 23, and pretty close to $4 a share this year. So some pretty good dividends there. Not as high as some other companies, but here you can see where they've beaten income each quarter. I do like this section in Schwab where it'll show you a few others, peers, and how I get a lot of ideas here. So I can see Colgate-Palmolive, Kimberly-Clark, Clorox, a lot of other companies that are also good ones to look at. Now their debt is 34 billion. Their current equity is 46 billion. So it was around 34 billion back in 2020. So not anything crazy. It's a fairly good value. And then over here, we can kind of look at the position. So this is in my Schwab account. This is my taxable. I have 100 shares here. I also have 100 shares in my IRA. And I wouldn't mind owning 300 or 400 shares. You can see here I've had a total return of 105%. Now, if I click on the cost basis, I can actually see I started buying them back in 2011, And since owning them at that point, they've grown 162%. Also bought more in 2014. Picked those shares up at $81. I picked up another 50. This was, I believe, I was probably, well, I didn't have it quite at 100. I bought three more in September of 2020, so I'd have 100 and I could start selling covered calls on them. So they were one of the first companies other than Coca-Cola that I started selling covered calls on, and this allowed me to get to 100 shares. And I've been able to do quite well. If you look at their, if we come up here and we go to research and then options and we go to options chain, if we go to Procter and Gamble, and I'm just bringing up the options chain, I'm just going to go to Greeks. I'm going to go, let's look at 16 strikes and let's do custom. I like to do monthlies, so I'll look at August 16th. I'll go out to October. I will go a little bit farther with covered calls, which is the primary thing I'm looking at. But again, with running the wheel, you also have good premium. So at 160 or 155, you're talking 60, between 63 and 82. Now, it was up pretty big on Friday, so this would probably be closer to the 80, 85, 90 for a 13 delta, which is a little bit low. If I go out to the next month, 76 days, which is September 20th, 155, which is a 17 delta, I could bring in pretty close to 105, between 105 and 141. Now, again, they were up quite a bit, so this would probably be like 120, 130. So not bad for being able to do cash secured puts or vertical put credit spreads. I typically I would look at this 145, so it's not outrageously pricey, to pick up this one. Or if I wanted to take less risk, again, this would probably have been a bit higher if they were down. But that's like a 10 delta. I could look at 150, 140. Now the 77 is quite high, but I probably would do a limit order and try to keep that as low as possible. And that's what I've been able to do. I've been able to pretty much double the dividends, almost triple the dividends, so instead of 2.4% for the dividends, I've been able to, I think between the dividends and the covered calls, earn about 7 to 8% on a yearly basis, which works out pretty well. When you come over here and you look, if I had just been selling options, just bringing in the cash, I wouldn't have this kind of a return with Procter and Gamble, this 105%. So, I invested $8,000 and now it's worth $16,521. So just an overall good company. Like I said, I'm probably, especially in my retirement account, going to look at probably I currently have 200 shares between the two different accounts. I'm going to look at probably going up to 400 shares. And they typically have fairly good premiums. So it's typically fairly easy to find good premium for them. They have plenty of expirations. Like I could continue to go out and, so they go all the way out to June 18th, 26, so you could even look at some crazy leaps. So that's the first one. That's Procter & Gamble. Next, we'll turn to Johnson & Johnson, another one of my favorites. Okay, so here's Johnson & Johnson. Let's go back to the summary page. They have been trending down recently, and they are paying almost 3.5%, 3.39 yield for dividends, which is quite good. Now, if you go out, you can see even though it looks like it's trending down long term, it's still been trending up. I do think they're probably going to start trending more up before too long. I really like going out farther on these. If we go to max, we can really see they've consistently gone up. But like anything, it's never a straight arrow. It's never, a straight line going up. They have dips. Companies make mistakes. They have bad earnings or bad guidance. Or with Johnson & Johnson, I know they got hit hard related to the COVID vaccine. So I do think they probably dipped when that was going on, but overall, fairly good company. Not as high a PE, 13.89. So I do think it's probably in a good range. You can actually see it's closer to the 52-week low at 143. So it's actually at a fairly good price at this time. If we went over and looked at earnings, we can look at year over year earnings. So they're going to be down a little bit, but their numbers are going to be fairly high. Then fourth quarter, they're going to be up higher and then just slightly down. So overall, probably fairly flat. So not the best year over year earnings, but also not too bad. I mean, if you look, every quarter is pretty comparable to last quarter. Dividends, 61 years. So they've been growing their dividend 61 years, 5-year growth rate at 5.67, 3.39 yield. So overall dividends, let's see what the payout ratio is really low, 45. You see here 45.51. So meaning they have plenty of cash. If that was close to 100, it would mean they're paying a lot of their cash out as dividends. Profitability, one of the other things I like to look at. So again, they just like Procter and Gamble, fairly good return on common equity of 24. I'd rather it be over 30, but 24 is a really good number too. And then again, I like the return on capital to be in the teens. This is about as close as you can get to 13, so it's in the teens. Growth, they don't have the best numbers for growth. One thing I forgot to mention with the Procter and Gamble, I do like to look at what people are saying, what the different analysts here on Seeking Alpha are talking about. And I also like going through and looking at the comments. So I'll come in here, and read the article, a lot of moving parts, but perhaps finally lurching in the right direction. And then, I'll read this. Some of these analysts are better than others, but quite a few of them do a nice job. So, and then I'll come down to the comments. I really like to see what people are commenting. And what the pushback would be. So something to always look at. Now, if you wanted to be a writer with Seeking Alpha, I know you can get the service for free if you're a writer for them. You can actually make money as a writer. If you really like to write, it might be something you might want to consider. Now, if we look at them over here, again, they're at a good price range. And now if we look at dividends, you can see they've steadily been going up. They're increasing them a bit faster than Procter and Gamble. But it's the same thing here. You went back to 2014, you would have picked up $276 a year on dividends, and now you'd be collecting closer to $5. Or $286. I think this was two payments, $119, $124. So they did increase recently. So this would be pretty close to $5 just in dividends. So that's one thing a lot of people fail to realize when you buy these stocks and you own them for many, many years. Every year, if a company's increasing their dividends, you're getting more and more. So originally you might have only gotten maybe a couple hundred a year, but 10, 20 years down the road, you've tripled that or quadrupled it. I yet like to use the story of Warren Buffett with Coca-Cola. He bought Coca-Cola in I believe it was the mid 80s, maybe the late 80s. And he currently gets as much dividends as what he paid for his original shares, which is incredible. But you got to remember it, since 88, you're talking 30 years. And if you're increasing them 4 or 5% a year, you're doubling. And some of these, they increase them bigger. It looks like 9%, 7%, and even 5 and 6% recently. So just overall a good company. And the fact with this too, with covered calls or writing cash secured puts, it's been fairly easy to double, if not in some cases, even triple the dividend. In a simple way where you don't have to take a huge amount of risk. Let's run down and look at their debt. Being a pharmaceutical, I'm sure their debt's pretty high, but their debt's 29, but then their equity's 65. So their debt to equity is not bad. It's like a 50% debt to equity, which is okay. That's what I like to look at. So I didn't like their year over year earnings, but everything else looks really good. Now, if we come into the options and we look at Johnson and Johnson, and again, I'm going to pick the monthly because I really like the monthly, and so I'll go out to October 18th. So for selling cash secured puts or vertical put credit spreads, I don't like to go that far out, but I probably would look at this 140 if I was going to look at August. And just like Procter and Gamble, they were up Friday, so this was probably pretty close to $1. I'd probably do a limit order around $1 for a cash secured put. Then I would look, well, is it really closer to 12? So if I could do a 140, 130 and pick that up for 90 cents, I probably would look at doing it as a vertical credit spread. Now, it's a little bit easier to do cash secured puts for companies like this because they are just such good companies. Typically they're not going to go out of business. It doesn't mean they can't happen. We've had monster companies go out of business, but it's more unlikely. If I went out to the September, so that I could do, again, for 140, it's currently 146. 140 would be below its 52-week low. But I probably would look at 135. This is really close to a 15 delta. Again, if the market was down, if they were down, I could probably get $1 for that. And then, again, the same idea. I used to really push, if I was going to make this trade here, that I wanted to at least get $1 for every contract. And I'm backing off that a little bit because I do like the idea of buying protection in some cases. But like I said, it may not be worth it in this instance. I might even go a little higher and say, well, I'll try the 140 for a cash secured put and bring in, maybe I would do a limit order of pretty close to $2. And then if it gets assigned to me, then I'm picking up Johnson and Johnson, a really good company, for 138. So it could be worth it. I could now, if I was just doing covered calls, I can come to the other side and I could look. I typically like to do a 20 delta. So you either have an 18 or a 29 delta, but again, some pretty good premiums. So here you have, like if I went with the 29 delta, and again, I was looking up here at the 140. So if I pick it up at 140, then I sell a 155. That would assume that it would have gone up $15 since I owned it. And if you do, what is that, 220 divided by 14,000? And then this is October, so you're talking what, July, August, September, October, 3 months, and multiply this by 4. You're talking 6%, so I'm already earning fairly close to a 4%. Plus, if I get assigned through the cash secured put, probably the dividend yield would be closer to 4%. So just through covered calls and dividends, I'm earning 10%. Now, if you did this on a monthly basis, so if we went back to the August 16th and did a 20 delta, so it'd be 155, I could bring up probably pretty close to 80, 89, 85, 89. Let's just assume 85. So if we did 85 divided by 14,000 times 12, 7.2%. Again, if you add the dividends, you're pretty close to 11 or 12%. And that doesn't include appreciation. With Procter and Gamble, I had really good appreciation. If you go back long term, I believe Johnson and Johnson is appreciated pretty well. But even if it doesn't appreciate, if you're able to earn pretty close to 12 or 13% in income, you're doing quite well. So either one of these, Johnson and Johnson or Procter and Gamble, can work out quite well. And both of these, I'm probably going to go ahead and add to my favorites list and look at potentially doing more trades on them. So that's what I wanted to share with you guys. Just something a little bit different. I've been more recently looking at mid caps, and I did do a trade on Home Depot. Home Depot is again another one just like these guys. But I do firmly believe these should be a part of anyone's portfolio. So as always, I'd be curious to hear what you think. Leave a comment. Please subscribe, hit that like button. And again, with my memberships, take a look at my different tiers. Details will be in the description. I have a lot of people joining. I am going to be increasing prices in August. So primarily just of my coaching club. The others will remain the same. I may add the ability to buy a year up front for probably the top two tiers, the coaching and the active trader, or the trader club. I don't know why I said active trader, but so take a look. It may be worth your while. And as always, thanks for joining me, and I look forward to seeing you next time.